Today's positive trading in the Dow occurred after a hammer type signal yesterday in the oversold area. And at the low of yesterday, look how far away we were from the T-line, giving a good impression that at least there could be a bounce back up to the T-line. The S&P 500 had more of a hammer type signal yesterday, still making again the 50 or the T-line the potential target. But remember, the downtrend remains in progress until we see a candlestick buy signal and a close above the T-line. When the market conditions are getting to where they might be bottoming and there's really no direction, individual candlestick charts, such as our recommendation on STRP, was based upon the doji followed by a gap up, telling us that we were probably in wave 1, wave 2, and this doji gap up took us through the resistance level of the 50-day moving average, making wave 3 the same potential as wave 1. Again, this is occurring when the market's kind of basing and not really reversing. But remember, each individual chart is the cumulative knowledge of everybody buying and selling, and part of that buying and selling includes knowing which way the general market is going. The same analysis can be used when in a short position, such as our recommendation when we shorted TRGP, and then yesterday, that far away from the T-line, we started seeing a hammer doji in the oversold area, telling us that was probably a good place to start taking profits, especially when it opened lower and traded lower. We just put our buy stop to cover the trade at the previous open, or that open. If it came up through there, it was probably showing some sort of buying heading up for the T-line, which is exactly what it did today. This is not rocket science. This is just taking common sense trend analysis using the signals and where they are with the overbought and oversold conditions and the other parameters like the T-line to be a target. That'll be it. We'll see you in the chat rooms.